Bitcoin has just fallen below its recent record high. So what does this really mean for investors? Joining us now is Oz Sultan, Chief Strategist of the Sultan Interactive Group. Oz, great to have you on the show. What is driving Bitcoin's recent pullback?
So you've got, it's an all-time high and a short-term pullback. So, we just broke out of a multi-month descending channel, which has been driving it all the way down to about 104, 105, but it's been bouncing back in that range. This upside move, I think, is really supported by a lot of ETFs, or really spot Bitcoin ETFs in a macro environment that favors risk assets, which Bitcoin is. And the all-time high was just reached a little bit earlier yesterday, which was 125,000. So we're kind of floating, right in that 125 range. And I also think after multiple months of pullback on the token, that we're probably looking at an opportunity for a breakout now. So a lot of analysts who've been talking about it hitting 200,000 by the end of the year, well, here's your marker.
All right. And with that marker in mind, we obviously have the 2.47 trillion market cap milestone. How significant is that? Do you reckon we're going to reach that inevitably, or does that just add to that sort of scarcity of the whole cryptocurrency?
More than likely, if you look at Michael Turpin's book, The Bitcoin Hype Cycle, he talks about this. It's really kind of this large circle, right, that's been going on since 2010. Which is consistently expanding outward inside of the Bitcoin ecosystem. And I think the big sort of question here is more of when does it hit 200,000, when does it hit 1 million, right? So that market cap is easily achievable over the course of, I think, the next year or two. The big question is going to be, where does this go next? And then also, where does that position Bitcoin in terms of reserve asset against gold and other assets that, most of your countries are looking at?
And when you mentioned gold there, why do you think that analysts would say Bitcoin isn't a true currency? Obviously, there's physical things like gold. Why do you think people are saying that?
It's because, in a way, it's digital gold. It is asset-backed by mathematics. It is asset-backed by a structure of computations that require the actual mining, so physical computations to generate the Bitcoin, to earn the Bitcoin. And it has a long-term velocity in terms of the trajectory of how complicated this is going to get, and how much Bitcoin is going to continue to be mined over the course of the life cycle of this, which ends sometime in the 21st century. So, it's different in the sense that it's not a renewable asset. It's different in the sense that, we can't have China telling us, oh, look, we found $4 billion worth of gold inside of a deposit that no one had seen before. So it's relatively scarce in terms of that factor. But it's, I think, more interesting in the sense that it is that store of value, but it's that digital store of value. And it's a little bit more transformable, I would say, than gold is.
And do you see governments in the future allowing decentralized currency like these Bitcoins, replacing?
More than likely. Yeah, so I think we're looking more at the CBDC side of this. So number one, I mean, Europe is on the track to launch their own CBDC by November. You've got a couple other countries that are looking at, state level currencies themselves. And then you've got large-scale adoption inside of Europe of Stellar. You've got adoption of XRP inside of the GCC countries, and ISO 20022, right, which is the whole SWIFT switch. So you've got about 8 cryptocurrencies inside of there. So they're definitely going to be used for cross-border payments. The question just becomes, on a state-by-state basis, what is their thesis? Do they move towards CBDCs, which, kind of control and track everything you buy? Or is it something that's more crypto native, that's like a Bitcoin, Ethereum, or maybe even, like risk focused, like a Monero, which is more focused on privacy?
And you talked about adopters there. Obviously, Europe mentioned. Is America still the largest adopter of Bitcoin, or is there another place out there that's sort of fully embracing cryptocurrency?
I think you've got a couple. America is definitely very big in terms of Bitcoin and Ethereum, as well as the cryptocurrencies that make up the breadbasket of ISO 20022, and there's about 8 of them. India is very big on Hedera and Polkadot. You've got a couple other countries inside of the Southeast Asian environment that are also very big on Hedera and Polkadot. But in terms of setting the stage from a regulatory standpoint, I really think it's looking at us. It's looking at some safe havens that are like, Cayman, Gibraltar, that kind of a thing. But no one really on the same size of what we're trying to do right now.
And how do you see government regulation or bans impacting Bitcoin's long-term value?
It's hit and miss. I think you're going to have some governments that are basically throwing themselves out of the ecosystem. Obviously more of like your North Koreas, but at the same point in time, they're out there, stealing Bitcoin and mining Bitcoin. So that one's a little strange. You've got some interesting guidelines that are bubbling up inside of Russia, but that's yet to be seen. And then I think the longest term focus on this really has to be, what's going to stem from the changes in sort of banking infrastructure around SWIFT, but more so what's going to happen inside of the next 8 months with countries kind of entering this. And I think it's going to become a cold war of currencies like it was in the 1990s prior to the euro, where you're going to be looking at, the EU's move into this, America's move into multiple currencies without like a state level currency just yet. And, a brand new economic market that operates 24 hours a day.
Interesting. I mean, it all makes sense. I mean, the world is all turning to digital, so why not move to that? It makes perfect sense. How has this Bitcoin performed in the past? Let's talk 2020. Obviously, we had the pandemic. If we're talking about stress and everything like that when it comes to currency, how was Bitcoin during that time?
So Bitcoin's performed pretty well. I mean, I think you have to look to the fact that it moves on a cyclical basis, right? So you'll have ups and downs. You'll also have to have big market movement. I think we had a big clawback in 2016. We had a little bit of a clawback in the 2020-21 cycle, which was going also into COVID. And then we've had some clawbacks, over the course of the past several months, now pushing us more into this bull cycle that we appear to be in the middle of today. So I think what you have to look at is two things. One is the hype cycle for Bitcoin. Two is what is the secondary cycle for altcoins, which are, there's a tremendous amount of them out there. And lastly, if you're a speculative investor, there's meme coins, that are inside of this ecosystem as well. And it's what do you think about those? What is your approach to even investing inside of those? And those are largely unregulated inside of the environment.
So what makes meme coins different to other cryptocurrencies?
Meme coins typically aren't going to have the same type of team backing them. They're not going to have the institutional structures behind them. They're not going to have a thesis that is, focused on kind of the longevity of the token. And sometimes they're just for fun, right?
Yes.
Like the Uranus token. We met with like one of the founders of that. It's like Uranus, the planet, but the implied joke was inside of there. And then I think the other thing too is that any event that happens around the world is going to get itself a meme token or multiple meme tokens. When Charlie Kirk was assassinated, there was 14 different meme tokens that were launched like literally within 8 hours, and I don't think any of those is really tracking anymore. And with meme tokens, there's also the question of losing all of your value. Right, there's a lot of these that are just set up and launched so that someone can rug the game, so to speak. They make their money, other people lose their money, they get out of the ecosystem. And that's where that becomes really kind of high risk. What we used to call penny stocks inside of the stock market is really what your ultra high risk meme coins have become today.
Great. Fantastic rundown from you, Oz. Really appreciate you, as always, coming on the show. Thank you so much.
Thank you. See you next week.